Hi everyone, here's the lecture 26 of the 2026 mentorship program. And if you have gone through the previous lecture, you know that I'm mostly having a live section at the opening price of the New York section. At least the first 1 hour plus, I will be explaining on what price is actually doing so that you can have a clear perspective to what I'm actually doing on the 2026 mentorship program and how you can apply the concept that is being taught throughout the lecture. Now, I talked about the weekly time frame, which I've told you guys that we'll be starting the lecture, which I'll be starting the live section talking about the higher time frame perspective before actually going down into lower time frame to take advantage of the specific trade setup that I'm actually looking for during the specific time. So on the weekly time frame on the dollar index, I talked about the counter trend to run the sell side liquidity. I told you guys that I'm actually anticipating lower prices on the dollar index to run the sell side liquidity, at least from a weekly perspective. And I told you guys that depending on how the daily is going to be trading, if the daily is going to be sticking to the idea in price trading lower, then I will be anticipating lower prices. And the first drawn liquidity is a sell side liquidity. And the reason is that price traded through the mid-range of the other block because looking at this trend, the daily trend is still aligned with the idea in price trading higher. But I told you guys that the fact the price traded below the mid-range of the other block, that if price were to trade lower, aligned with the weekly perspective, then we should look at price we're expecting the other block, which is a breaker's candle, but the other block has a resistance area in price, leading to lower prices to run the sell side liquidity, which the trade that we took advantage of yesterday on yesterday live section, it was based off the idea. Because from the 1 hour perspective, there was a shift in structure during the London section, leading to lower prices. And before the opening price of the New York section price was already inside the 1 hour fair value gap. And I told you guys that the draw on liquidity I will be looking at in price is run on the sell side liquidity. Is a draw on the sell side liquidity. That was our draw on liquidity yesterday. We're looking for price to run the sell side liquidity. Price took out the sell side liquidity, did an internal shift, but later on, price did a shift in structure, which currently I'm actually looking at the breakers. Seeing this internal shift taking out the swing low, I'm actually looking at the breakers. If there's going to be a continuation in trend in price trading lower, I will be looking at how price will be reacting to this candle. So this price range is what I'm actually looking at to how price will be reacting to this price range. And the time frame I will be looking at is going to be the 15 minutes. Which on the 15-minute price is still on a downtrend. You can see this is just a brief retracement to a 15-minute order block. So I will be looking to sell on the dollar index, which on Euro USD I will be looking to buy. I will be looking to sell on the dollar index, paying attention to how price is trading. And my drawn liquidity going in on the New York section is to anticipate lower prices to run the swing low. Now I will be sticking to the idea in price trading lower to run the sell side liquidity. But if price was to trade higher to run the 15 minute high, I wouldn't be looking for any sell. I actually will be waiting for a 1 hour confirmation and price trading lower before actually going in looking for those sales. So if there's going to be a run on the high, trading above the swing high, I wouldn't be looking for any sell. But as long as price is still within the price range of the breakers block and the 15 minutes order block, I will be anticipating lower prices. On the 1 minute, there's a shift in structure, which I was actually looking at. There's a shift in structure, price taking out this high, shift in structure. Here's the opening price of the New York section. After the opening price, price retraced. Now there's going to be a continuation in price. Let's look at how price will be trading. There's going to be a run lower. Then we can take advantage. Currently, I'm not in any trade regarding the trade idea. I'm not actually looking to take a sell. I want to see a run on liquidity. Then an impulsive price action trading lower. If there's an impulsive price action trading lower, the fair value gap should be an entry model I will be looking at to take advantage of the setup, which I'll be using the Euro USD as my entry currency in taking any trade if I were to take the trade. On the daily time frame on Euro USD, let's start from the daily time frame. The trade idea is to see if price will be respecting the breakers candle, which is the other block. You can still call it another block, to see if price will be expecting it and the general liquidity is the buy side liquidity. On the 1 hour time frame, the trend has been bullish from the 1 hour time frame, and our drawn liquidity is the buy side liquidity. Now you can take advantage of this setup directly from the 1 hour time frame. You can say from the breakers, this should be an entry. Now this is under the perspective of a weekly expansion. This is a weekly expansion trade. If you were to take a weekly expansion trade, this should be your entry from the breakers candle. You're anticipating a continuation in price trading higher. But you have to go lower to a lower time frame, just like the 1 minute SMC strategy I'm actually talking about. We'll be looking at the 15 minutes, with the 15 minutes is currently at the 15-minute order block. We're looking to see if price will be respecting it, trading higher, which is the proportion of the block. And here is the other block, the 15 minutes other block. Now I did took a setup on the 1 minute during the London section, which my two profit was at the swing high, was at this high, and price traded to the target, which I wouldn't get much about into it first. Let's talk about what price is actually doing currently now. Now the first retracement to the 15-minute order block led to a shift in structure, which price not respecting the inversion fair value gap. Here's an inversion fair value gap. Let's just call it the 15-minute fair value gap. Price did not respect the 15 minutes inversion fair value gap as a catalyst in anticipating higher prices. Price traded through it and most likely will be looking for a good run on the liquidity, like a run on the swing low before the opening price of the New York section before actually looking for a buy. But if there's going to be an impulsive price in price trading higher going above the inversion fair value gap, then that might lead to a catalyst of anticipating a continuation in price trading higher. But for the meantime, I will stick to the idea in price. Trading lower to run a sell side liquidity, like the equal low, before actually looking for a buy, waiting for that shift in structure. So it should look like this. You run the shift in structure, anticipating higher prices. But if there's going to be an impulsive price, so we don't have any high impact news today. It's Tuesday. We don't have any high impact news that I can say that I will be anticipating an impulsive price during 8:30. We don't have any 8:30 news, so the price action before the 8:30 we kind of sketchy compared to when there's a high impact news. So a run above the inverted fair value gap, I will be anticipating a continuation. So for now, we'll be looking at what price will be doing going in. So remember, if you want to ask any question on the comment section, use the Telegram group because that's the main means that I'm mostly looking at in answering any comment section questions. If you have any questions to ask, you just use the Telegram group. The link to the Telegram group is in the description. So you can check out the description to find the link. So you have any question about how I got to the idea of anticipating higher prices, you can ask a question directly from the Telegram group. Price is consolidating and the time is 7:14. So let's look what price will be doing. Which I've told you guys I would like to see a run trading lower to run the sell side liquidity, then a shift in structure, then I will be anticipating higher prices. Because price have tried to run low, tried the first attempt, failed, traded higher, came back the second time, and if there's going to be a run and a shift in structure, there should be a high probability of something anticipating higher prices. But at the same time, if price was to trade higher to trade above the 15-minute fair value gap, which is now an inverted fair value gap, then I will be anticipating higher prices. So I will be dropping the link to my profile so you can have easy access to join the Telegram group. I'll be dropping the link to the Telegram group on the comment section. For the link to the Telegram group is in the comment section. You can check out the live comment section. So if you have any question, you can send it directly to the Telegram group. We'll be answering your question live. So if you have any question about any price action and how you will be trading, mostly about the 2026 lecture, that's one of the main reasons of having this live section, is to cover up what we have been going through, all the lectures that we have been going through in the 2026. If you have any specific question, you can ask the question. Okay, there's a question about the, the weekly expansion trade I talked about. Yes, when you look at the 1 hour time frame, the 1 hour time frame is already aligned with the idea in price trading higher. It's already aligned with the idea in price trading higher. After the run on the sell side liquidity, when price retraced to the daily order block, here's the daily order block. Price took out the sell side liquidity, led to a shift in structure, a retracement where expected the breakers block, created a new swing high, retraced to a 1 hour fair value gap. Now, this is an entry. This is a weekly expansion entry. So you can call this the Tuesday entry model in anticipating higher prices to run the buy side liquidity. So as long as price is still aligned with the idea in price trading higher, you can easily anticipate higher prices to run the buy side liquidity. So back to the 1 minute. Let's have a different screen for the dollar index so that we can look at both currency. So a run above the 15-minute fair value gap, I will be anticipating higher prices. Price is currently at the 15 minutes. Sorry, it's not a 15-minute. Let's change it. It's not a 15 minutes. It's actually a 1 minute fair value gap. So it's a fair value gap. It's actually a 1 minute fair value gap that price uses an inversion fair value gap to trade higher, do a retracement. And we're looking to take a buy as soon as price trades above the high. Price came close in trading above the fair value gap. If price is going to be respecting the fair value gap, should see a continuation, then we're looking to enter, looking to take advantage of the setup from the continuation. Tradable. So price is currently above the 1 minute fair value gap. So you can take advantage from the other block or from a fair value gap directly, depending on where price is actually trading at the time of looking for an entry. But a short-term 15 minutes area should be our first draw on liquidity. So let's look at the dollar index, a 15-minute area to use as a first target. From fair value gap, 15 minutes fair value gap. That should be a great area to look as a first target to our perspective. So on the 15 minutes, we can identify the same fair value gap as our first target. Identify the fair value gap should be at this area. This should be our first target, and the overall target is a run on the buy side liquidity. Here's the entry level at the 1 minute fair value gap. Stop at the swing high. First target, and the overall target is the sell side liquidity. So let's look at how price will trade to the first target before looking to extend our take profit. But that will be after taking partials and trailing our stop into profits before actually looking at price trading to the overall target. So the same goes to the entry here. Stop at the swing low. And our first target is the 15 minutes fair value gap. Now let's move this a little bit so that we can look at the position more clearly. Now, how do I measure my position before actually taking advantage of it? I normally look at the lot. I look at the pip size of my stop loss. Now, taking this position, this has a 3.8 pips. So if I were to bring it, if I were to look at it approximately, this should be around, since it's a pop pip stop, I will be calculating my stop based on 4 pips. But I do calculate my risk to reward based off the pip size. So that's how I normally take advantage of it. And I'm using a 10K account. I normally go in with a one lot size. So I go in with a one lot size. If you were to look at the trade I posted in the Telegram group, after I took partial and trailed my stop into profit from yesterday trade that I took advantage of, you notice that the position size was a one lot size trade. So after taking half of the position, I was in with a zero point 0.5. I think it was around 0.6 because I added some position that was based off to cover up the fee. But when I'm trading a 10K account, I go in with a one lot size rigs. So the rigs in this trade should be around 30 pips. Normally it's because I'm scalping, so I don't like to go in with the 1% because there's sometimes that you might get stopped out by multiple times. Sometimes I do get stopped out around three to four on an average, 3 to 4 when it's a very bad day. It's around 3 to 4 losses in a row. So I don't normally go in with a whole 1% on a trade. I normally calculate it by pip size. So if this trade were to trade against me, I think it should be around 4 pip stop. This would be around a $40 stop in running out the sell side. But based off fees, should be around 45, which have been stopped out. But the trade idea is still valid to see if price will be trading higher. Let's take this off so that we can look at it correctly. Now, by the end of the week, I'm going to be showing you guys my trade journal. Now, I created a spreadsheet, a Google spreadsheet on the YouTube channel. I've talked about it in the YouTube channel. I've posted about it in the Telegram group. So I will be showing you guys the spreadsheet where I generalize all the trades that I'm taking advantage of in the live section. Now, this is based off the 1 minute scalping, the 1 minute entry model that I'm actually using. So I'll be showing you guys all the trade I took advantage of throughout the week. And you guys will look at how I normally look at my price action when doing my back testing on a weekly basis and the trades I took advantage of, and if I ended the week in profits or ended the week in losses. Let's look at the 15 minutes. Let's look at the same 15 minute dollar index. Now the trade idea is still valid. I told you guys that will stop looking for a sell when price trades above the other block. So if there's a trade above the other block, I wouldn't be looking for any sell. But as long as price is still in the breakers block at the same time aligned with the 15 minutes of the block, I will be anticipating lower prices. So if there's going to be a continuation in the trend, trading higher, I will be anticipating lower prices. Back to the 1 minute. a good run to trade lower to run the sell side liquidity. That should clear out any liquidity below price, just like a simple power of three. Should be price trading lower to run the sell side liquidity and shift in structure. I think that should be a high probability setup because price have been ranging within the range of the 1 minute fair value gap, within the range of the 1 minute inverted and fair value gap. So a run below price to run the sell side liquidity, still a great idea. Let's look at the 5 minute. So so we can see there's a high expansion in price. And price is currently above. So we're stopped out before the continuation, trading higher. If there's going to be any fair value gap within the price range, we've been looking for higher prices. So let's see. Same goes to the dollar index. Let's look at the price action to see if there's going to be a continuation. Now, about the issue of my mic being low, I don't know. I've maxed out all the settings, and at the same time, I'm still finding the live section. The audio is a little bit low compared with the settings. So I will try to look at me using another software to see if that will improve the sound, to improve the audio. But for now, I'm currently using OBS, and I don't know if you have any way around it. You can just send me a DM to show me how to actually increase the setting because I've tried to increase the setting multiple ways, but it still end up the same way. I've looked at the settings on how to increase the volume, to increase the sound, but it still haven't been that helpful. So here's your entry. Stop at the swing low. First drawn liquidity. The first drawn liquidity should still be the first area. Now our stop in this trade is a $50 stop because we're actually using a one lot size. So if price of the trade below, we'll be down by, it should be around 10 pips. Should be down by 10 pips if this was a trade against the trade idea. And our first target is around 8 pips. So that's around a 1.5 hour. Remember, this is not our overall target, it's just a short-term target that we should be looking to take a partial in if we're actually looking to buy straight into overall draw on liquidity. On the dollar index, that should be the swing low, stop at the high in our target, the first draw on liquidity. Now, this is the third time the price have traded above the fair value gap, the 1 minute inversion fair value gap. Here's the first attempt, the second attempt, and the third attempt. So yesterday I was talking about the difference between trading a 1 minute strategy like this or using a higher time frame entry level like the weekly expansion trade plan, which I told you guys that you can get a quick result trading the 1 minute because everything will be faster compared with the 1 hour entry model or even the 15 minutes or the 5 minutes. You'll be having a quicker result, but at the same time, you need to learn how to control your emotions because there's going to be a lot of ups and downs in price moving between your stop or moving to low in below your entry level or above your entry level. So you need to learn how to hold trade, stick to a trade plan, and learn how to be patient in price because there's going to be a lot of ups and downs. Now I've been used to this because I have been trading the 1 minute for a while. So I've already gotten used to the price action on the 1 minute in waiting for this right time. I do have a predefined plan before actually coming in into the chart. Now you move your stop to the swing low because if price were to retrace with the same volatility the price is using in trading higher, I'm very sure it's going to stop you out. So you move your stop to the swing low. So at this point, we are in this trade with a stop of a 1.5 pips. Our stop is at the 1.5 pips, and we are writing the trade to the first draw on liquidity. So the stop should be at the high because if this were to reverse, then there's a high probability in price trading to run the swing lows, and you'll be caught up in a trade. So the good thing about the 1 minute is that you can easily minimize your losses because as soon as price moves in your favor, you can easily take partials. We will be taking partial. I'll be taking half of the position as soon as price trades to the 15 minutes. Taking half of the position, then we'll be looking at price trading to the overall target, which is the buy side liquidity. And as soon as I take half of the position off, moving my stop to break even. So if I were to be stopped out, I think the trade should cover up the losses of the first entry, which was a $40 loss. Which I told you guys that I'm using a fixed lot size, which is a 1 pips, which is a one lot size. I'm using a fixed lot size to take advantage of the setups. So we're moving my stop to swing low. So we are riding this trade almost on a risk free trade. We still have around close to 2 pips in in our stop loss as it price the trade against us. And that should be around $20 if you're using a one lot size on a 10K account. Now I will be trading a prop account live with you guys. I don't think I'll be doing it now, but I think it should be around next week, which personally is going to be on an affiliate link because I will be showing you guys a prop firm that I actually use and we're referring you guys to a discount price. But at the same time, I will be trading the prop firm live with you guys to show you guys how to actually trade it and how you can use a 1 minute scalping strategy to pass a prop firm challenges more faster. I will be showing you guys the process of passing it more faster, going more aggressive, or going conservative with your entries. But that will be explained going in next week. But let's look at the reaction from the live section first before putting a lot of interest into it. So we're looking for a continuation in price trading higher. Price is retracing to the 1 minute fair value gap. Let's call it fair value gap. Let's make it red. The price was to trade through the fair value gap and stop it out, which we already predicted our stop, move our stop to the swing low. Look at the 15 minutes. See the reason of the deep retracement. So look at the 15 minutes on the dollar index. Now, looking at this price action, you can see what I'm talking about the frustration. It's not actually a frustration if you know it, anticipate it, have it as an idea that is possible in price straight into your direction, getting close to your take profits or your take profit one or take profit two, depending on how you're looking at price. And price will get close to it and there'll be a retracement in price. Sometimes it's more faster, sometimes it takes time. But it's something that you can expect trading the 1 minute because trade the 1 minute is like telling the market that you're looking for a quick result and you're going in for those short-term trades. So a 15-minute candle, a one 15-minute candle can cost a lot depending on your trade position. Which in the 1 minute might look like price have been trading a while, but when you go to higher time frame like the 15 minutes or the 1 minute, you see that all price was doing was just consolidating within the price range. So that is so if you were to trade the 1 minute, make sure you're using a higher time frame perspective because you're trying to filter out those key moments where there's going to be a good expansion when the 1 hour is ready to expand and the 15 minute is ready to expand based off your overall trade idea. Let's look at the 5 minutes. Here USD. 1 minute. Okay, price is trading lower. Price is currently close to our entry level, which our stop is at the swing low. Let's move this fair value gap. If there's going to be a turn in price, it should be from the other block because that's the only support I'm looking at on Euro USD. They can actually pull price higher. But if price trades below the mid range of the other blocks, then that should lead to lower prices to run the swing low. On the dollar index, price is way closer on the dollar index, running out the high. Okay, we're getting a little bit of momentum and price trading higher, but it's not a confirmation that price will still run the high. It can still reverse at any time. Well, that should be a good confirmation that there's going to be a continuation. So note if you're going to be day trading or taking short-term trades like this, there's going to be a whole lot of borrowing hours, mostly trading the New York section. Now, the New York section is one of the most volatile time. If you have to trade the London section, that should be a different case. Now, I do trade both time frame because I'm mostly looking at the charts, looking at the higher time frame. So when I can identify a short-term trade, I do take advantage of those trades. So our first target is the 15-minute fair value gap. We're looking to take half of the position off as soon as price trades to the 15-minute fair value gap. Now, price came close to our entry before the retracement. Now, that doesn't mean the price will be trading higher. We're still looking at price supporting from the 1 minute order block. And if that were to lead to a continuation, we'll be taking half of the position as soon as price trades to the 15-minute fair value gap. But there's an internal shift on the 1 minute in price running at this high. So let's say if price will be trading higher. Remember, we already minimized our losses on this trade, moving the stop to the swing low. So we're currently at 8 a.m. We're currently at 8 a.m. Eastern Standard Time. And I didn't see much of an expansion between 7:50 to 8:10. maybe that should lead to a draw on liquidity to the high because within that price range, price is mostly going to be taking out a buy side or a sell side liquidity. So if price is going to be traded higher, I think before 810, we should see a run on this high because that's the closest liquidity to price currently now. So let's see how price will be trading. Price is close to the swing high. If price were to take out the swing high, I'll move my stop into profit. Now, the reason is that we might see a run on the swing high and a retracement lower completely because looking at the dollar index, you can see dollar index already took out the swing low. So I'm most likely going to move my stop to break even now and look at how price will be trading. Because the price action trading higher, it's not much of an healthy trend. It wasn't that fast. So this is a balance range and price might retrace lower to run it. So it's either price will trading higher for us to take half of the position out and leave our stop at the swing low, or which I've moved my stop to break even currently, or price will be stopping us out, which we currently don't have any risks involved in the trade. We're riding this trade on a risk free trade. For the trade to the fair value gap, we'll be taking partial, taking half the position, or we get stopped out at the break even. So price took out the high on here USD. Stop is still at the break even at our entry point. With price is now close to the first target. So let's watch through price. Once price trades to the first target, I think I'll be in the live stream. You guys already understand my bias on the dollar index at the same time on Hero USD. If you don't understand the bias, you can go through the video. You can go to the live stream from the first section, which I told you guys from the first 10 section. So wow, the price actually was very fast. It traded to the 15-minute fair value gap, but at the same time, it was very fast for me to even take a partial. I just rushed and closed the trade. Which I closed the trade at the break even. Now, I don't know why price traded that fast because I'm pretty sure there's no high impact news today. There's no high impact news to say that it was because of the high impact news that price traded fast. That should be based off something, maybe like a tweet, which we can't actually tell currently now, but the price action was very abnormal in trading high before at the same time retracing within a 1 minute space of time. But price trade to the 15-minute fair value gap before actually stopping us out, but it was a little bit fast. I can tell you that I didn't close half of the position before the retracement trading lower, but I got stopped out at the break even, which I can say is an abnormal price action. But that is all for today's lecture. That is all for today's lecture. See you guys in tomorrow's lecture, the same time, at the opening price of the New York section.